What's going on, guys? Jay here. So today I have a presentation for you guys about the best strategy for traders like you to basically pass prop firm challenges the easiest way and to get the payouts the easiest way as well. So there's a lot of things that we're going to cover in here. It's a longer form video. Make sure that you're staying for the entire thing. Okay, if you don't have time to watch this now, make sure that you allocate the time throughout the day, because every single step of the way there's a ton of value. There's stuff from Tom Hougaard, there's stuff from ICT. So watch the entire presentation. This is what we are going to cover today. Why consider futures prop firms? It's a relatively new model, so why should you guys be considering working with them? Their positioning, good and bad, the pros and cons from these prop firms, the best strategy for you guys to get payouts against their rules, their pros, the cons. So what's the best way to basically get the money outside of the prop into your account? And then at the end, once you've heard me, Tom Hougaard, ICT, I'm going to give you the blueprint for success to be successful at managing prop accounts and your personal broker account as well. All right, so let's get started. Why make this presentation? So prop firms are relatively new. They've been on the market for just over 10 years. I'm not going to name drop. You guys probably know who they are, but they're spreading like wildfire. So the good ones, but also the bad ones, and they're competing against each other. So they're basically trying to sell you a bunch of bullshit to get you into their ecosystem. That's literally the nature of prop firms. Okay, so I'm here to do a little bit of debunking for you guys. So a lot of the information that you find online is quite manipulated, in fact, and a little toxic to your progress as a trader. So I'll go through a few of the examples of that in order for you to understand really the prop firm's true nature of existence, okay? How they position themselves against you. You're going to understand that you're competing against the prop firm and they're basically trying to make it very difficult for you to achieve your goal as a trader. So knowing what they want versus what we want, I'll explain to you how you can make the most out of this relationship, because you are able to coexist in a very synergistical fashion, but there are ways to do so. So I'll explain to you guys how to do that. And then it's very important that you stay through the entire presentation. Everything that I'm showing you is evidence-based. So there's no surprises. There is a bit of personal opinion, but everything can be fact-checked. Okay. In fact, the resources and the sources that I'm using are verifiable, so you'll be able to check that out. Stay through the entire presentation. It's a little bit longer than usual, but you're going to get a ton of value, and I promise that you will be a better trader after watching this. So the problem about the prop firms that we know, a prop firm is a company that provides traders with capital in exchange for a percentage of the profits they generate. So that is the definition of a prop firm. There's millions of them, but the ones that we know of are a little bit different. Okay, so there's no actual capital behind the trades that we place in the market. So we're trading on demo and we're getting payouts from these demo accounts. All right, so this is a well-known fact across the industry. There's no debating right now about your challenge accounts and your express or sim or whatever they call it accounts. Those are all demo accounts. Okay, so how can they pay real money to traders if we're on demo accounts? Well, it comes from challenge fees, activation fees, reset fees that are paid from us traders that are trying to enter this ecosystem of the prop firm. Okay, no surprises there. All right, but I hear this. Well, Jay, they will A-book you if you do really, really well, and they'll copy trade you to make money on your back. It's basically like if you're placing chips behind a blackjack player to basically make money on the moves that he's making. Do we have any evidence of this? Okay, this claim is very important. I haven't seen any evidence of that. They're private companies, so they don't have to disclose. They're unregulated. They don't have to disclose that information. So this claim that they are A-booking traders after they are successful so that they're copy trading traders, that claim is the most important declaration preventing prop firms from being considered an illegal Ponzi and getting shut down. All right? Because a Ponzi is an investment fraud that pays existing investors with funds collected from new investors. All right. So if they're not A-booking traders and they're not placing money behind their trades, they are taking challenge fees and they're paying out those challenge fees to the payouts that are being requested by traders, and that is a Ponzi. Okay, so that's why this claim, whether it has evidence or not, I haven't seen any evidence, is the only thing that's keeping these people alive in the United States legal system. Here is from Tom Hougaard's live Telegram channel, his interview that he had with either a prop firm owner or an associate or an affiliate or an employee over there. Okay, so we're going to go through this together. So Tom Hougaard is asking, what would you do with this information? So here's the information. I've had a conversation with an individual who works for a funded challenge company. I promised 100% anonymity, and I will respect that. This is what that person said. I ask you to ponder on this and contemplate what to do with this information. Okay, so thing number one, the funded company claims their clients are trading real money. That is not the case. I just talked about this in the previous slide. Okay, this has been confirmed from this person. The company takes in about $25 million a year in fees paid from challenges/challengers. 25 million. Okay, the company uses tactics to ensure that only 1.5% of all their users go on to trade a real account. So from challenge to a live account or sim, whatever, it's a 1.5%. In other words, 1 to 2 people per 100 will get funded. The company works with social media influencers and helps them edit their trades and their profiles to ensure they appear profitable. Manipulation, toxicity, social media, all of that fake shit. This is what you guys need to hear, okay? Out of the 1-2% who receive a funded account, these accounts are now a liability to the funded company. Well, why is that? As they are still booking accounts, although it appears that it's a real account for us. So it's like an insurance company. They will charge you a monthly fee for your coverage, and then if you want to, withdraw some of the money to pay for a claim, they're going to analyze the claim, but it's a liability. You're a liability to that company's profit because you're taking money outside of it. So this is how prop firms work as well. The company pays out no more than 1.5 to 2 million a year on $25 million to the people who make money on their funded accounts. Okay, so this is all legitimate information from Tom Hougaard from an interview with somebody who works at one of these prop firms. Okay, so that should raise a flag. Listen to this, guys. The drawdown rules are so tight and so stringent that it makes it impossible for a trader to pass or to sustain the funding. A normal market development will statistically see a trader experience a 5% drawdown even during a long and successful career at least twice a year. Okay, so for the sake of the argument, if you're given a 100K account, you get 10% drawdown and you risk 1% per trade. It only takes a couple bad trades to wipe your account. Okay, Tom says that it makes it statistically impossible to sustain a funded account. So unless you have a flawless track record, and Tom Hougaard says that if he was trading in these conditions, he would fail. Okay, and Tom Hougaard has had the worst beginning of the year of his entire trading career in Q1. You guys can go look at that. He was negative 40%, I believe, in drawdown on his personal account. So even Tom Hougaard says that he wouldn't be able to stay alive in the current conditions that the prop firms are putting you in terms of the risk management that they request. That is a very powerful message, okay? And you're hearing it from arguably one of the best traders in the world with the most transparency. So are prop firms bad? No, prop firms are not bad for traders. They still pay out real money, but only if you respect their rules and their conditions for getting payout. So now that you know this, you need to understand that from the moment that you enter their ecosystem, it's going to be a tug of war between you and them to get the actual money out. Okay, that's their business model, is money in from you, challenges, fees, everything, minus the money out, which is payouts. So they're going to make it very difficult for you to access payouts. Okay, and I'll give you a list of some of the things that they do, but here are the pros and cons of working with prop firms. So some of the pros is that you have really easy access to capital. Okay, you can pass a challenge in one trade and have access to $2,500 of drawdown room to be able to take trades. And if you go positive, then you can get a payout. Okay. You have more leverage than with a personal futures broker. So with the prop firms, you're able to open positions with more leverage than you would at your personal futures broker. So you have access to trading a mini with basically $100, right? If you pass a challenge, you have access to trading a mini. That would take you at least 1,500 at a personal futures broker if you're trading intraday. It's a great school for learning risk management. Okay, so it's so hard that if you're able to succeed in that ecosystem, you've basically made it as a trader. You'll be able to have a lot of success outside of that prop firm as well. It is a scalable business model, so that's nice. You're allowed to copy trade multiple accounts. You're allowed to grow these accounts. It's not something that's recommended to grow inside the prop itself, but it is scalable. Here are some of the cons. So most of the rules are created to make you fail. No surprise there. These rules change at any moment's notice. They're very hard to stay on top. So if 1 week this was okay and then the next week it's not, and you've basically haven't seen that information, you violated the account, and that puts you at risk of not being able to request a payout. Okay, that's very, very hard to stay on top of. They have heavy use of detrimental marketing. So the fake stuff that you see from the fake gurus online, that's been confirmed that they actually do that. Okay. All the fake screenshots are edited. There's a lot of fake shit marketing. There are competitions. They want to put you in the spotlight. They want to put pressure on you guys. So a lot of detrimental marketing there, and they'll spin all the new rules to make them appear like they're benefiting you. So we've reduced the risk on the account so that you can trade with better risk management. That is not why they are putting the rules in place. It's not to benefit us to keep the accounts longer. Every single new rule that they're implementing, they're trying to spin it to make it look like they're benefiting us and making us better as traders. That's not what they're doing, okay? So take this shit out of your eyes, guys. They are selling you this stuff, and they are pros at sales and marketing tactics. Here are a very few but notable prop firm rules, okay? This is a tiny list, a very tiny list, but this is a list of things that make sense or don't make sense, okay? So in the make sense section, the consistency rule somewhat makes sense because they don't want you to have, on average $200 winning days, and then there's a geopolitical event that drops in and everybody's shorting the market and making 10 grand on their account. Multiplied by the amount of traders that did that, it could bankrupt the company immediately. So that somewhat makes sense. They don't want anybody gambling, pretty much, okay? So along the lines of gambling is they're asking for a minimum number of winning days. So they don't want you to just come in there, take a 10K win, and then leave with the money, and that's it, okay? The scaling rule, you're already over leveraged, right? If you have a 50K account and they let you trade 3 minis, that makes absolutely no sense at all. So even with 1 mini, it's kind of over leveraged. So the scaling rule somewhat makes sense, okay? Here's a section of things that don't really make sense, and this list is tiny, okay? So it's just condensed. No access to the entire account profit. So once you are in the live account and that you're trading it, well, you're not going to have access to the entire profits. They're going to make it very difficult for you to access 100% of the balance before a very long time. Okay, so that doesn't make sense. If you made the money, you paid the challenge, you paid the activation, you have the account, you made the money, you should have access to that money. Okay. They also ask you for a safety net amount. A safety net amount of what? On a demo account, they're asking you to leave a buffer in there so that you actually trade, make the money, and then that money is going to be reserved to do nothing but be used as a safety net, because they're going to catch you on the drawdown once you put your money in the pot to get a payout. After your first payout, your max drawdown balance is now $0. So the buffer that you had at the beginning no longer exists as soon as you put your money in the payout pot. Okay, your balance is now 0, and that's the amount of drawdown that you have left on the account. It is tiny. So enforcing risk to reward ratios, they can decide, and they can change this, but they can decide, well, you're scalping and I don't like your risk to reward ratios, so we're going to deny this payout because we think that you're risking too much to make too small. Contract size consistency. So if some days you decide to trade micros, 5 micros, if some days you decide to trade 1 mini, that's also a flag for them. and they can deny a payout because you don't have the contract size consistency. Maximum drawdown on maximum daily loss limit. So you have a daily loss limit at most of these places, but some have incorporated an extra buffer to basically try to penalize you or catch you if you went too much in drawdown, but you didn't hit the maximum drawdown limit. Anyways, it's a bit complicated. Inactivity rule. You go on vacation, don't trade for a week, you could blow the account. For inactivity, minimum winning days, dollar amount. So why at some places it's $200, why some places they don't have that, why some places are $100. So it doesn't really make any sense. Where's the evidence to suggest that it should be that amount, right? So that doesn't make sense. Payout caps, if you do too well, they're going to cap you at the payout. New rules every other week to make it harder to get payouts. That does not make sense at all. But again, they're going to say that it's for your own benefit as the trader. They're making all these rules so that they are going to benefit you. That is not the case. So what's the best strategy, Jay? Okay. So now that you understand that the prop firm's goal is to make it extremely difficult for you, and that your goal as a trader is to actually get payouts, it means that you guys are doing the tug of war. You're not aligned in terms of your goals. In fact, you are the liability for the prop firm. How do we position ourselves to basically succeed with that ecosystem? Well, the simple answer is you need to pick the easiest accounts to pass from the firm that has the easiest payment policies. So the least number of stupid rules. That's how you do it, okay? I'm going to explain to you step by step what to do, but this is how. Easiest accounts to pass, cheapest accounts to pass, easiest payout policies to access the full amount. That's it. You're going to take that money and you're going to transfer it into your live brokerage account or your bank account. It's going to be real once you get the payout, all right? But until you get the payout, it's just a number. It's not real. It's not in your hands. So we're going to be looking at the cheapest and easiest accounts to purchase, the number of trading days that you should take to pass, how to get access to your full payout. This is how you measure your prop firm profitability. So your bottom line at every month, if you're trading prop accounts, is going to be how much did you spend, right? And how much did you make? So how much you made that month minus how much you spent on challenge fees, resets, whatever. That's your prop firm profitability. So that's the goal, is to get you prop firm profitable so that you're able to move that money over into your live personal account. All right. So what's the best account to purchase? Simple answer, 50K. There's a lot of information on here, okay? I'm going to take the time to go through this, not look at all the numbers, but the 50K account is the best account that you can buy at any prop firm, and I'm going to explain to you why. Okay, first of all, what's the actual cost of getting a 50K account? Well, most firms will charge you a small fee in the beginning. It's super stupid. It could be from 10 to $150 for 50K accounts. And then if you fail it, you can basically reset it for around the same cost. Okay, but once you pass it, they have a hidden fee. Okay, it's called an activation fee. It is a hidden fee on any landing page where you buy the actual prop challenge. Nowhere does it show what the activation fee is once you actually pass it. So they get you into the driver's seat, you pass the thing. Oh, wait a minute. Now you've got an activation fee, and it's almost 3 times the size or the cost of the actual initial fee. So that is a hidden fee for about $140. Okay. So small initial fee, challenge fee, rebill fee is going to be the same. And then you get the activation fee. And then, if you don't reach the profit target within 30 calendar days, well, that initial fee will rebill. So the only way to actually stop the rebilling is either if you fail, if you cancel the account, or if you pay the hidden fee / activation fee after passing. Okay. Light bulb moment. You guys should only be considering challenges if you have shown proof of profitability. Okay. Or else you're just gambling. You're wasting money. So the caveat is that if you're profitable, it means that you have the skill to place real trades with real money in real markets and make profit, right? So every single trade that you place on a challenge account is a trade that is not monetized in real life on a real account. We're going to come back to this on the next slide, but that's an important piece of information I want you guys to have in your head right now, okay? So why 50K? This, guys, is a framework of how to calculate which account is the best in terms of bang for your buck and in terms of ease to pass, okay? These numbers are going to change over time. It is December 11th, 2024. Use this framework to basically do the same math, but these numbers are going to change, okay? So the first number here that's important is what account offers the best cost to drawdown ratio. So the lower the R value, the better. So we have three firms, 50K, 100K, 150K. And if you divide how much it costs you to get the account by the drawdown, this is the value that you get. So the cheapest is at a 50K account over here at firm M. So you divide $80, there's no activation fee, by this number, and this is the number that you get. So these are all R values of the ratio of the cost of the challenge divided by the max drawdown, okay? And you can see that it becomes harder the more the target increases. So everybody wants to get their hands on the 150K accounts, but in fact, they're the hardest to pass. So you've got a second little math example over here. Basically, if you divide the max drawdown by the profit target. So wouldn't it make sense, right? Wouldn't it make perfect sense that if you're buying a 50K account and you have a target of $3,000, well, if the target is doubled on 100K, shouldn't the max drawdown be doubled as well? Hell no. You only get $3,500. You don't get $5,000 of max drawdown. So they double the target here, but they don't give you double the drawdown. So this is another R. This is another ratio that you guys can look and you do your own math. But this is the easiest account to get, is a 50K account with these metrics over here. All right. So this is the framework to basically identify the cheapest challenges to buy and the easiest ones to pass. All right. Time you should spend to pass a challenge. So simple answer, you need to get out of this challenge as fast as possible. And here's why. The light bulb moment that we talked in the slide earlier. If you're somebody who is profitable, or you have shown proof of profitability, and you're somebody who can make $200 a day on average of trading, well, every single day that you spend doing a challenge is money that you didn't put on a real account for $200 every single time. So that's the most important piece of data to consider, because it's not measurable with these metrics. But if there's 20 trading days in a month and you're somebody who can make $200 a day, if you're spending 1 month to do a challenge, you're offsetting $4,000 of unrealized gains or profit, okay? So it's costing you, in reality, if you're a profitable trader, it's costing you $4,000 a month to do this challenge, because every single trade that you're placing on it is a barrier for actually making the real money on the real account. So that's why you need to get out of these things as fast as possible. Okay, so I'm giving you an example at those three firms with a 50K account, a 50% challenge pass rate. So it means that you pass one, you fail one. Here's what it costs you if you pass and you fail one at these three firms. So the cheapest one is still at this firm over here. And here you have the number of points that is required with this number of contracts in order to pass this challenge. But on the flip side this is the amount of drawdown in points that you have in order to be able to pass. So if you guys are still looking for a profitable strategy, I'm sure that you know by now that I do have a group where you can learn this. You guys can go to nexusblast.com/pro. I've got a profitable strategy with all the data since the beginning of January 2024. I have all the stats to back it up. If you guys want to find something that is consistently putting 10 points or plus in your pocket every single day, come and trade with us. I live stream every single day at 9:30 in that group. Okay. So once you have your first funded account, you're going to need to rinse and repeat. Don't go trading immediately on that new account. You are going to understand why later. Okay. So it's important to have a second account as kind of a psychological buffer. So it's going to be important to try to get a second one before you actually start trading on one of the first live accounts. accessing your entire profits is your end game. Okay, so the prop firms are making it very difficult for you to do that. So not only do you have the rules, the policies, all of that stuff, the risk rules, you have to respect everything, but once it's time to get the payout, this is where they get you good. Okay, so at this prop firm, you're only allowed accessing your payout after your sixth payout. And this firm requires 10 days, 10 trading days between each payout. So you do the math on that. You won't have access to your money that you've made until that sixth payout. Okay? Guys, think about this for a second. If something comes up in your personal life and you need access to that money now, you're not getting it from these two firms. Okay? Find a firm, and there's one that exists where you can have access to the entirety of your payouts. Yes, it's going to expire the account, but it doesn't matter because the next piece of information that I'm sharing after this slide is going to cover that in detail. So don't worry about taking the money out and blowing the account. Okay, don't worry about that, but make sure that you're choosing a prop firm that gives you access to the entirety of your money when you need it, because it is yours. Okay, you played by their rules. It's now time to get your entire profits. At this firm over here, they're going to ask you for 30 winning days of $200. So whether it's a 50K account, 100, 150, $200, we're considering that a winning day. You're going to need 30 of those. So you'll need to be $6,000 into profit minus the losing days in order for you to be able to put your hand in the pot of the payout. And then, by the way, if you touch the pot of payout and you withdraw a single dollar out of that, well, you have no more buffer. You have no more drawdown. You're now basically moved to a live account, indirectly, because you are not allowed going under your balance of $0. So you have no more drawdown limit. So some prop firms don't have those restrictions. Every firm has different payout policies. Do your research and try them out to test the waters. See which one you like the most. All right. Guys, you need to stay for this. This is an absolute gem, all right? This is ICT. Not everybody listens to the ICT Twitter Spaces. Not everybody listens to every ICT 2-hour and 47-minute videos. I clipped 8 minutes of pure gold, okay? So you guys are going to see this. This is going to hit home hard and change your life in regards to the topic that we are talking about today, okay? So watch the entire thing, and then I'll come back with you guys.
If you have this big, massive account with these prop firms, why the fuck are you letting them hold that money? Why? I read all these stories and these people talking about how they're being denied and delayed and delayed and delayed. Dude, seriously, there's more people learning how to trade better than there has ever been. My students are cleaning up. And there's more of you coming all the time. And they're changing rules and they're changing rules and changing rules. My advice to you, okay, is if you have big balances, take them home. Take them home. Spendable money in your bank account. I mean that sincerely, because what's coming, you're going to want to have that money. And there's nothing guaranteeing that these companies stay solvent. They're not going to go out there and broadcast to you, yeah, we're in financial straits. We're about ready to close the doors. But when you start seeing them say, well, we're delaying this, it's money's getting paid out. You have to wait, and now they're asking you to record yourself. I don't know, man. It just seems like it's a whole lot of things that are being added. And the reason why I say this is because if you were able to build it up there, then you'll be able to do it again. Start from square one with the cash in your hands. See, that money ain't real cash to you in their eyes. It's just numbers, it's digits. And at any time, they can come with any excuse to say, well, yeah, we're going to deny it. You didn't pass this thing. You did something squirrely over here, and you don't have it. So while you're in good standing, get it. Then start back all over again. What's the difference if the money's in your bank account versus them saying that you have this much money in profits you could take out? The difference is you can fucking buy groceries. That's the difference. The difference is you can pay your car note, your bank notes that you owe loans on, your house note. Your ends can be met. Showing people what you have in unrealized profit in an account. To me, I'm a money man. That's bullshit. That's a number. That's no different than you taking a napkin and writing down, this is how much money I want to have in my bank account. Because that's the equivalent. You want that money in your bank account, but you didn't ask for it yet. Why? Get that fuck those leaderboards, man. Fuck those leaderboards. Those leaderboards, that's the trap. That's the gimmick. Because they keep dangling the carrot. Oh, if you keep building the account, if you keep dangling that carrot, they're going to keep doing what? Trying to reach for something instead of taking the fucking money that's owed to them. Take your money. That's your fuck you money. That's you, I beat you money. That's your money that you can spend on whatever the fuck you want to spend it on. You want to waste it and pour it in used cars? Go ahead. Bottom line is that you've made that money. You've earned it. Take it home. Don't get caught up in all the bullshit. Leaderboards and all that other shit, that's the trap. That's the trap. If you have big balances owed to you and you can liquidate it, liquidate that motherfucker. Take it home and put it in your bank account and then start all over again. You're saying you don't have to trade if you can't do that? Because that's exactly what you would be telling me, that you don't know how to do the same thing that puts you in that same position. Oh, if I take the money out, then I got to build it all up. The fuck you do? What are you talking about? You got to build it up. It's in your own bank account. It's in your hands. It ain't your fucking money until it's in your hands. The mentality of these individuals that have these big balances sitting on these prop firms, and they parade around on the internet saying, "Look at this. This is what I got. This is what I got sitting in my account right now." Are you fucking nuts? I'm a money person, okay? If that money is your money, bring it home. Bring it the fuck home, because it's not your money. If it's in their hands, it's their money. And remember, if it's your money, why do you have to ask for it? When it's in your bank account, you don't have to ask anybody. You spend it. But it just shows the level of financial illiteracy, even in prop trading. These individuals, they get caught up in the social media badge of honor. Look what I've got. Look what I've built my account up to. Fuck that. I'm not impressed by that. What did you put in your bank? Because that's what this is all about. You did not start trading to be on a leaderboard. You did not start trading to have other people glad hand and shake your hand and say, wow, you really ran that account up a lot. Okay, that's wonderful that you ran it up. But how about running that shit in a bank wire to your bank account? Okay, and then we can glad hand and say, damn, son, that was how you do it. That's how you do it. It's about taking it home. It's not about how many times you pass a combine. Who gives a fuck about that? It's funny, as a kid growing up, one of the things that pissed me off about Ric Flair, I love to hate him. One of the things that pissed me off is, dude, like, there he is 10 times world champion. I mean, I know shit's all scripted and rigged, okay? But as a little boy, I believed that shit. I was mad all the time. Every Saturday morning, I was pissed off at this motherfucker because he was cheating. And my argument was always, yeah, you're 10 times. That means you fucking lost it 9 times. You lost that bitch 9 times. So I'm never impressed when people say, I passed another combine. I passed another combine. No. How much money have you brought home? How much have you brought home? Because that's what this game's all about. It's not about how many things you can pass. How about passing me my motherfucking money, Jack? Okay, pass me the money I got on hold in your prop firm and bring it back to me. Okay, because then it's spendable money, and then you've made money. You didn't make any fucking money with those digits on a leaderboard or a prop firm account saying that you have this much money. That's not money. They're just numbers. It's only money when it's in your hands and you can spend it on whatever the fuck you want to spend it on. And anybody that tells you otherwise is fucking stupid. Because all that is the trick to never have to ask for all that money from the prop firms. They don't want to be paying out those big payouts. They don't want that. That's against the whole fucking process. They make money from you losing. The only way they profit is by you re-upping and restarting. That's the game. That's the Ponzi. So if you have a lot of money, you've built it up, you earned it. Get it, take it home. And then start it all over again. Because if you know what you're doing, it's nothing to do that. In fact, it's better because you're freed up emotionally and psychologically. You've been paid out. If you're running up $10,000 or more, like, pay yourself. There's nothing guaranteeing that your streak is going to continue. Because these conditions right now, and I promise this is the last thing I'm saying because I have to get out of here. I get something to eat. I'm hungry. The conditions that we're trading in right now, and we're about to walk into in the next 2 weeks, going into 2025, is the hardest market environments I've ever traded in. And I've been around for 32 years. I've seen a lot of different markets. I've seen good markets, fast markets, slow markets, tight markets where they didn't want to move anything. But these are the most difficult market conditions I have ever seen. And I want you to understand that. Because if I'm telling you that, I'm telling you that for a reason. If you have a way to get money that's owed to you, and you've earned it in these prop firms, take it. You're going to need it. rough times are coming, and you've earned it then. You did not earn it while it's sitting in a digit format. Think about how many times you've heard someone, seen someone, or have experienced it yourself where you had unrealized profit that you could have taken out, but you wanted to build the account up. I'm telling you, someone as a money person, there's no difference between you taking that money out of their hands when it's owed to you and putting it in your bank account and starting all over again. Those combines are nothing to pass. They're nothing to pass. But staying in them when they're funded, that's the challenge. So if you work that hard to get it to where it is where you have that much money to take out of it, take out of it. Take it out. Just get paid. That's the main thing. You have to be able to exchange that money from their hands, which is in numerical format only, and turn it into real money, which is what they don't want to do. They don't want to turn those digits into real money that has to be paid to you. Because when that happens, their profit drops. What business model ever has that mind or that mindset that, our success is on the basis of you losing continuously and paying for those losing, but our failure is you succeeding. But that's exactly what that model is. That's exactly what it is. And guess what? There's always going to be a market for that until the regulators step in and say we're going to do things differently now. But while it's afforded to you, and you have money that's there that should be given to you if you ask for it. Get it, secure it in your bank account, and then start over. And just repeat that. But leaving it in a position where it ain't your money is stupidity. Because given enough time, given enough opportunity, that digit format will be no longer obtainable for you to take it and turn it into real money.
That was crazy. All right. So with everything that you've seen, everything that I've said, everything that Tom Hougaard has said that he was not even capable of passing with, the rules that the prop firms are pushing on you guys, with everything that ICT said, here is your blueprint for success. Okay. You now have the capability to identify and purchase the easiest and cheapest prop firm challenges. Okay. You understand why it's important to pass them as fast as possible to offset the time that you're wasting placing trades as a skilled trader on challenges where you're not making the real money from these trades. Okay, so get to the funded stage ASAP. Then you trade it normally, okay, and you respect their rules. So you bring your leverage to a regular size and you respect their rules. And then once you get in the payout zone, then you take as much out as possible. Okay, ideally everything. There are firms that will give you everything. Yes, it expires the account, but now you understand, as per what ICT said, that it doesn't really matter. You put those funds into your live broker account, live personal account, and in that account you trade only the highest quality setups only. So now, once you've bought a challenge, passed a challenge, gotten a payout, you take that money and you put it in your live broker account, and then you keep buying challenges, you keep passing them, and now you're always in the ecosystem of placing your best trades on your personal account, placing very good trades on your prop live accounts, and then you're still doing challenges on the side so that you always have, accounts as buffers if ever it's the case that you end up blowing one or something bad happens to it, or if you want to copy trade them as well. So that's the beauty of being able to have more than one. That's why I said earlier in the presentation that try to get two before you start trading on your live account. This way, if ever something happens on a Friday, you're able to get right back into the live markets on Monday, and then you're also trying to pass another challenge that week. So you're juggling with three accounts: personal, prop funded, challenge. Okay, you always have those three kind of open, and then you place the trade on the one that it makes the most sense to place it on. Your goal should be to use prop firms to fund and grow your personal live account at your broker. That is the blueprint for success. You pass a challenge, get a payout, put that money in your personal live account, and then you rinse and repeat. You use the prop firms to your advantage to put the money into your own bank account, because it's only real once it's in your hands, as ICT said it best. Okay, if you do this, you're winning at the prop game. That is what you need to do. Don't leave any money over there. You take the best prop firm that gives you the easiest and cheapest access to accounts, and that doesn't restrict you from accessing the entirety of the payouts. All right. So guys, if this presentation helped you even 1% and you're going to be a smarter and a better trader after this presentation, please do me a favor and hit the like button, subscribe to the channel, and leave me in the comments section below the part where it made a lot of sense and it hit home with you hard. Let me know what that was. I'm really interested. I live stream on YouTube every single morning from 8 to 9 a.m. I'm in the private trading group from 9:30, live streaming every single day. Guys, come and hang out. We have a lot of fun. We make money together. And don't be a lone wolf in these markets. Let's have a nice small community. And I look forward to seeing you every single morning at 8 a.m. on my YouTube channel. Thanks and have a great day.